you have any immediate questions, maybe just something like you wanted to ask, maybe to clarify before we actually start, or so far.
No, until so far is everything clear. I have one question and maybe some off topic, but the strategy that you are learning me, is it also can you also adjust it of use it in a situation where the price is in a range when it's not trending?
Yes, you can. However, again, like this is a bit this is a question like relative and a bit subjective. I mean, the market can be, for instance, in a long time range on higher time frame,
Yes.
but then on lower time frames you will have your trends. Okay.
Yes.
So, however, so this is the first part, and then the second part. Make sure you are actually asking me about this, because when I hear this question that people often ask, and when I hear something like this, my ears, they hear this: can I trade this strategy every day, every week, or every week, every day, and basically in any market condition? So make sure you are not asking me this. Because if you're asking me this, then this is a foundation for your mistakes and overtrading. So first of all, yes, this strategy can be adopted, and you will backtest, you will see how it works.
Yes.
If being completely honest, this strategy works better in a clear market condition. I'm not saying only trending, but in a clear. And in addition to my answer, I want to tell that any strategy requires good market condition for the strategy. So
yes,
I mean, so you see a slight difference in the mindset of what I'm trying to explain you. Yeah. So yes, you can trade different time frames, different conditions, but even then, for instance, if you want to trade ranges, even the range should be in the context of overall like some movement. So maybe it's a bearish market overall that is now ranging. So yeah, but definitely make sure you understand that you can't trade everything. Okay. Yeah.
No, I can understand that.
Yeah. Other than that, it's possible to adjust it. Okay.
Okay.
Yeah. And so if that's all, then let's start. Yeah.
Yes.
So today we have technical part and mindset part, kind of like we did in the first session, but a bit more detailed.
Yes.
And first, let's start with the technical part and then finish with mindset. Just I think that the technical is better to start. So you see my screen, my chart.
Yes.
Yeah, okay. So first question that we will discuss is management, real quickly. So, let me bring my zoom a bit higher. So what about management? What I recommend doing is when you have your entry. So again, I will just illustrate something like pretty random. I really suggest or remind you to use alerts. So for instance, you have your entry here, the trade is running. Now, it's better not to just stare at the chart, waiting when you can go break even, because management, it includes entry, then break even level for most traders, and then take profits or partials. What I recommend is realizing, so planning your break even level. So let's say for me, I want to go break even when the price goes here. I just put an alert here. So it seems I can do it in backtesting, but in real life, I have an alert. It's connected to my smartphone, and when the price will go there, so at this moment I open the chart on MT4, MT5, and just go break even. And for me, basically, my management is over because I don't use partials. I just have my 7 RR target and that's all. So now I will have either my 7 RR or my break even. That's all for me.
Okay.
For some people, for instance, this could be their first take profit. Again, don't do this common mistake when you just sit in front of your computer. So it's okay to sit, of course, and watch sometimes how your trade develops. But it usually, for most people, for their mindset, is better to place an alert here and then just go away, and that's all.
Okay.
So my main point for the management: use alerts for break-even levels and take profits to keep your mind neutral, and specific levels of take profits for you will define after backtesting. Okay, because what usually people do is they say, okay, what should be my what should be my take profit? For instance, if I ask you, what is your usual take profit, maybe before we started learning or just right now, what is your usual take profit?
I will look to the left, zoom more out and look to the left,
and
okay. I will look for more obvious recent high. So for instance, if you zoom a little bit more out, okay, I'm looking at the yes, I'm looking in that area.
Okay. And if I ask you what usual RR do you trade run? So yes, you have some understanding where is your take profit, but in reality, how it turns, how many RR do you trade run or ran before? So from your experience.
Now I don't have a clear strategy for my RR. Until this, after starting with this course, now I'm more use RR in my checklist. So it's now is more new for me than in the old days.
Okay. So, but my main point here, so it was just a small talk that I never intended to find a solution right now, and here is why. Because you need actual foundation for your management. Many people do this mistake that they come to the chart and they say, oh, my mentor said my RR should be this or that, or I just heard somewhere, or I know that 5R is a good level or something like this. So they are not building their management from their experience. And what you are doing now in this course, like one of the parts of what you are doing now, is building your foundation for everything else, and management included. How it will happen? You will have like 50 or 100 backtesting trades, and you will actual results of how much your personally your trades run, and then you will see on your 100 trades and say, out of 100, like 50 of them run to maybe 3 RR, and then I mean, it's like already a crazy good result, but maybe 20 of them run to like 10, and then 10 was losers or break even. So on this result, you will need to decide what you want to do now. So based on these only numbers, for me, it makes some logic to go and say, okay, this is statistically significant, and I will use my 3RR or something like that. And then after next 100 trades, you see how your live trades is going. Do they actually run to 3RR or maybe even more? And then you can adjust. So management is a dynamic. Yes, of course, one way of defining your targets are using structural levels. But the problem with this is it's much more emotionally involved in reality. And you will have different results every time. And in my experience, again, hear me correctly, I'm not saying that it's wrong, okay? I'm just saying that in my opinion, it's a harder or better word, more complex way of management. Because when you enter a trade, you now don't know, so yes, you expect the price to run this high, but you kind of don't know. Your trade will run already maybe for 10 hour, which is
Yes.
be even better than usual. But now you need to hold to this high just because you decided so, and you see it's much more stressful. So your trade is already running, but now the high is higher, and these structural levels, they will be different every time. And
Yes.
so emotionally, when you will try it, you will understand that it's maybe you will understand that it's harder. At least for me, I'm talking from my experience, and that's why I decided when I analyzed my backtesting, again, you will do it with your own journal. I realized that for me, fixed RR is looking better. Why? Because I know that when I have a reaction, and again, I'm not trading all the move usually. I'm using this high only as my context, as my bias for a reaction. And I need a reaction for my 7RR. And that's all. I don't want to use partials or anything like that. So you see how many details we can discuss on management. Okay.
Yes.
So
Yes.
this is my point of management, that you will have a backtesting, and then we will discuss. Right now, I'm just guiding you and showing you that, okay, for backtesting, let's say you will have 4 or 5, because I know that these trades, they usually run these targets relatively easily. Okay, and we will come back to management after some backtesting that you will do later. Now let's talk a bit about structure. So you already know structural rules. You already know some quality of structure. What I wanted to add today is a thing about internal structure. So what happens sometimes is that you can have a real clear market. So you can have really clear bullish market with some breaks, and this bullishness is supported here with these bullish breaks on daily. So again, not going into too much details, but overall we have a bullish market, bullish shift, and just stepping into the zone, starting a reaction from a zone. So overall bullish, but then you come to your zones on your middle time frame, let's say, and you want to find a confirmation now from this zone somewhere. Again, it's a bit random. I'm not looking at too many details. And then you come even lower, and you understand that you came into a really bullish zone. So this is a bullish zone from 4 hours from daily, with this huge overextended range on your confirmation time frame. Okay, so this is the fact that right now, if you are following the rules exactly like they are laid in structure, you can be bullish on your entry time frame when this breaks. And then what you realize is that when it happens, this is already a break of your 4 hours impulse, for instance.
Yes.
And you basically are left with no trade. And that's why when you see a relatively overextended impulse into your confirmation area, and again, this impulse is bearish, but our bias is really bullish and clear. And then you see inside structure start to develop. So you see inside structure start to develop, and you can use, so you see everything here is inside structure. So all this part is inside structure of this 10-minute range. And that's why if we're talking about confirmation or supportive biases on middle timeframes, sometimes it's okay to use inside structure to find your entries. So something like this. Again, we will work these questions more because you will analyze it and backtest. So we will come back to this many times. But here is your new rule, yeah? When you have this overextended range supported by overall context from higher timeframes, it's okay to use clear inside structure, okay, to find it. So this about
only by overextended drop like this.
Sorry, what was the beginning of the question?
Only by really overextensions bearish drop like this.
Yeah, or bullish. I mean, it can be a different
Yes.
direction. But what my main point is this: sometimes you have a zone, and then the move is just too big into a zone on lower time frames, and you basically can't confirm other than from inside structure, and that's it. So it's
Okay.
that simple. So when you
Yes.
it's a bit you will need a bit more experience with this strategy, but I just wanted to introduce you to this situation because
Yes.
if, as you know, market is not as simple as this, and it can present, it can express the price action in really different situations. Now let's talk a bit about the zones and specifically about the refinement. So as you know, sometimes you will want to refine the zone. So let's say we are looking at this 2 days. So this is a 2 days inbox. Oops. So we have 2 days chart. This is a break from 2 days. This is a low, this is a high, and this is your origin of the move or the root of the move. So this bigger zone. As you know, for us, it's important not to use the whole zone usually because it's just an area too big to confirm. Because when you will go here, you already can start confirming and you will fail. Then you go here, start confirming because you see some reaction and fail. So to avoid this problem, we are refining a zone. So what can we do? The easiest part is just to take a smaller unmitigated part of a zone, so something like this, or to refine to a smaller candle. Again, I'm just recapping on of what you already saw in the videos.
Yes.
Or you can go, so actually this is my point, you can go to lower time frames on this. So we know that this is the lower time frame representation of this 2-day bigger zone, and you can find the refinement. Again, do you remember that in that video about the refinement that I talked about this, that we can refine on lower time frames? Yeah, do you remember?
Yes.
Okay.
Yes.
But what I wanted to point out today is that when you are looking for refinements, don't just take don't just take random places like this. You just see, okay, this was some refinements on lower time frames or something like this, some random move, down move before the up move. Actually think, do you have a zone on lower time frames that created something important like a break of structure or something like that on its own time frame? And if you ask this question, you already see that this zone is much better refinement compared to this one. Why? Because this was the down move. First of all, there was no up break after this. This was a part of actually a bearish impulse which worked out. So this refinement is kind of not in alignment with higher time frame. But if you look at this part, you understand that from this zone we had this move. So again, this is all a part of that daily zone, but we know that inside there was this significant move on lower time frames. So when you are looking to refine on lower time frames, look at the zones that did something important. Now also for the zones, pay attention to a thing that we can call clusters or chains of supply and demand. And how it looks schematically, it's looking like this. So we have a move and then mitigation.
Yes.
We are creating a move and then market comes back to mitigate the zone which mitigated the previous zone. So it starts this chain. When you have something like this, you can add it to the quality of your setup overall. So when you have a chain or double mitigation or cluster, it's all the same thing. You can expect that the market actually clears everything out what he needed to, and it adds to the probability of continuations. Instead, when you think about a situation like this, so a move and a move, so you see there is no chain here. We left the imbalance, and now when the market will be here, I will think twice, because I will see that this zone that broke this never mitigated the zone deeper, and I will consider a different scenario that maybe we want to go for deeper mitigation. Again, I'm not saying that we need to trade this move, but it's just an overall consideration of what is possible in this situation and how we will treat and interpret the market. A quick example would be this one. So we had this break, and by the way, these chains can be created like with the deepest possible mitigations, or with the mitigations of this bigger zones. So like in this example. So basically we don't have a chain here. We didn't go to mitigate at least this level. So we don't have a chain here, but we have a chain here. So at least some kind of a chain. So we have a zone, and then these candles mitigated this zone, but never mitigated maybe deeper. You see, the last possible mitigation never happened, but some kind of a chain, some kind of a cluster created. So what we see here is this development of an uptrend, and again, we have this mitigation. And now we need to just admit this fact and add it to the confluence for the bullish side. And now, as you see, we have this move, and again, we created this cluster. So what we have is one zone, second zone, third zone. So we have four zones in a row, and that's why, for instance, when we had these bearish shifts, we realized that maybe this is just a mitigation of a deeper zone or something like that. So just pay attention to this, and when you will have this, again, this is all fractal. So when you have something on this on confirmation, you see the chain, and you now think, should I go here or maybe wait for deeper mitigations? So when you have a chain, it's okay to find your entries even higher, because you understand how the market is moving, it's doing all it needs, and now even if it's here, it's more probable that it will continue because already everything is mitigated. Okay, so this is about the zones. And now about the confirmation. About the confirmation, just pay attention to the times of the session. Okay, so when you are looking for your confirms, so imagine you are here looking to confirm this zone. Maybe you went to your 1 hour chart, or maybe 2 hours, and now you see you saw this shift, and maybe you looked at this zone. So pay a really big attention where when your entry is happening. Oops, hi, that's me. You need to pay attention when it's happening. So if it's happening during the Asia, it's not so good to enter for Euro USD or like USD CAD or something like this, but it's okay to enter pairs like GBP GPY, or sometimes gold or USD GPY, so something with GPYs. Again, Tokyo, so this session is kind of that, as you see. Then London, Tokyo is okay to entry, and then this time between Tokyo and New York, so when only London is open, so this is a time when on lower time frames we will see some ranges usually. So for me, the best time is like London, Tokyo intersection, or intersection of London and New York, and then New York after this peak or on the peak of market volume. So this is 2 hours, 3 hours after the New York Open. And then if I miss the trade or didn't find anything for myself, I will skip the end of the day. So for my confirmation, again, if you will trade higher time frames for confirmations like 1 hour, 4 hours, then it will be not so important. But anyway, you need to actually pay attention and bring it to your trading plan and follow it.
Yes.
So this about confirmations. And now, so you of course remember that we have the quality of the structure, quality of the zones, and quality of confirmation is basically the same as combined quality for structure and zones. And you when you have everything like high quality, you can say my setup is good, but it's also nice to include the consideration of your mental state when you are entering a trade or looking at the market. So when so again, let me remind you or just say that for me, I have these A, B, C, D qualities of setup. So A being the best and D the worst. And I have not only technical parts, but also mental state as my quality representation. So for instance, for my A quality setup, so when everything is good structurally, I have like real clear zone and so on, a nice confirmation here somewhere. Now I need to monitor myself and ask myself, what's my mental state? So for me, the ideal mental state for trading is just a neutral mindset. So not overexcited, not frustrated, focused, like so nothing basically nothing influences me at that moment from the world outside of trading and so on. So if I have this nice state of mindset, that's good for me. Now if I'm not focused, distracted, angry, frustrated, and my setup is really nice, I will not consider this an A setup, because usually what it means is that so for me personally, again, it means that maybe I made a mistake here somewhere, and maybe this trade is actually a part of maybe a bit of over trading, or something like that. And usually if you have maybe this like intuition or feelings that something is wrong, maybe I don't need to enter right now, or so it all tells you maybe you missed something in your analysis. So when I have this more negative mindset during my trading day, I will not consider these setups as the highest quality, highest probability, and will continue to monitor myself, and just it's it's like a signal for me that I need to monitor myself a bit better. And yeah. And of course, the worst situation is when you understand that you are trading almost a non-existent setup of maybe something outside of your strategy, or you just realize that you are very emotional from external reasons. And again, usually it happens after losers. So maybe you need to reconsider your analysis, just spend more time, because you understand that maybe you are making a bit emotional decisions. Okay.
Yes.
And now, so this is these were some details on technicals, but we continue with that. And today I wanted to talk about context. Okay, so this is a new part for our analysis, and context is something really interesting, and something that you will need to learn to use in your trading. So what is market context? Again, we can really trade the market with just multi-time frame analysis. So we can analyze the market on different time frames, find our confluences, and say, okay, it's bullish on weekly, now it's bullish on daily, and now maybe it's bullish on 4 hours, and I'm good to go. And this is already a working strategy. However, the market, unfortunately, is a bit more complex. And there are different considerations that you can consider and think about when you are entering a trade. And based on this, you can say, okay, because of my overall context, it has more probabilities, or because of my overall context, it has less probability. So for me, context overall is like a language. So remember how you started to learn English. Again, English is like my not native, so I also learned it. And my teacher is always said me that when you don't know a word, maybe you think about the context of the sentence or a context of overall situation that you are in, and then you can maybe really don't know the meaning, the like exact meaning of the word, but you realize what's happening and what the person trying to tell you. Yeah. So by the way, do you use context maybe already not, but maybe you use in language when you speak in foreign languages? Do you use it now? Yeah, so something like I described. So you don't know a word, but you can kind of understand what
yes, yeah. That's true.
Yeah. And so exactly we have something like this in the market. In the markets, why? Because sometimes so first of all, we can't know for sure what will happen. So every point we are talking, every point we are trying to trade, we are trading probabilities first of all. And for instance, when I'm entering to the bullish side here, I'm not saying to anyone that I'm 100% sure, but what I'm saying is that maybe I'm 55% bullish here, and that's all, or 60% bullish based on context and my experience. So again, we are not market makers, we are just following. We're trying to follow the market, the composite man, or the smart money, you can call it how you want. Yeah, today we specifically will discuss what questions can we ask ourselves to have more deeper observation, more deeper analysis for the market. And first of all, let's divide this context part. And again, this context part is not just abstract thing that I'm talking about. It's really important part of your analysis from now on. Okay. So first of all, let's understand that there is context when you are doing analysis overall. So again, I will send you it in the checklist, but it's good to introduce it like this now. So you have analysis and you have execution or entry. And the context for these parts will be a bit different. So for analysis, your first question will be actually what? So what is happening in the market? This is basically multi-time frame analysis that you are doing on different time frames and trying to understand, do you have any kind of confluence first of all? So we are doing multi-time frame analysis to understand many things, how the market moved, what it did before, so what are the trends actually. But then when you see three confluences or more, so for instance, you have weekly bullish, daily bullish, and your entry time frame like 1 hour or 4 hours bullish, that means that you have three confluences, and that means that contextually from this question you have more probabilities for entries. But then imagine a situation when your weekly is bullish, and even maybe at this place your entry time frame is bullish as well, but your daily shifted here like this. So you see your daily is shifted bearish, and now you have two confluences and your middle time frame is kind of missing from the picture. Then you say, okay, my context is a bit lower from the standpoint of this. Now let's quickly talk about reaccumulation and redistribution in the market. So at this point, it does not make sense to be like really detailed, but this is just a part of the what question and what it says. So let me introduce you this really common pattern in the market. So when the trend is developing, and then let's say we have one shift to the bearish side and second shift to the bearish side. So these are real structural shifts. So let me actually draw it correctly. So we have this, and we have 1, 2. So from what you know already, this market is now bearish or bullish? So we are specifically at this point of time. So if this is bearish or bullish market?
I'm now looking to the left. I'm considering, is that the break of structure?
Yeah, so these are structural breaks, and this is one break, second break. So remember, we discussed that when we have two breaks, this zone is kind of non-existent. Yeah.
Yes.
So
and after the break of structures 2 times, now I will say it is bearish.
Okay. Yeah. Yes, you are correct. We discussed this, but now we are widening the perspective a bit, and this is why this question is now not only like dry technical analysis, and maybe I'm not saying it correctly, but what I mean by that, we can't consider only these breaks in the market. So first of all, we understand that maybe this move is a part of a higher time frame move, and what we have here might be an impulse on 2 days, 3 days, or weekly, which is still holding this specific protected low on the weekly.
Yes.
And more importantly, we need to know this pattern that when the trend is developing, the market tends to produce reaccumulations in a bullish market or redistributions in a bearish market. So what is this is just the market can't continue on with this ideal structure. It needs to break some lows to the downside to have this liquidity and all the sellers to actually, for the strong side of the market, to buy from all the sellers that are here. They need better prices, so they first of all go lower and then higher, and it's just the nature of the market move. So the market moves like this, and that's why when you have even 2 shifts of bearish move, you need to consider overall situation. So for example, you need to ask yourself how the market moved before. And before, as we see, we had a really bullish market with consecutive shifts, maybe even with the chain of supply and demand. And now we are coming to this place, and what do we see? We see that, and now we know about reaccumulation. We kind of expect it to be reaccumulation at least before this point holds, and then we can use middle timeframes or other timeframes to actually the market to confirm our idea and maybe enter not straight from here but somewhere higher. And again, all this idea of reaccumulation, redistribution, it comes from Wyckoff concepts. I think you've heard about him.
Yes.
But it's not only about that. It's a concept that you can find in many other studies like Elliott waves, or even this classic like Dow theory of trends. So again, what Elliott says is that we have that the market is moving in some form of waves, and after producing some impulsive price action, it needs to make a deeper corrections. So you can use these concepts in different schools of trading, but for me, first of all, it's just how the market moves. So again, main point, when you see your 2 shifts of structure, consider what happened before. Let's quickly see it on a real chart. And this is basically the situation. What I was telling you is that this is a bearish shift on weekly, and so this is a new shift. So we have really bearish market if we consider only this part of price action. But now if we zoom out, we see that we sustained bullish move for a long time, and all this bullish move came from a really long downtrend. We see some accumulation here, and now we see a market that is moving out from there. And what can we add to this is that in this specific situation, this second impulse never actually broke the 2 days zone. So we know that this is a zone from 2 days, and yes, structurally we are bearish, but overall we are still bullish in this situation. And by the way, if we take this part of price action and put it maybe here, so you see that, so imagine that, so this is this part, okay?
Yes.
So bullish on 2 days. So this is a zone on 2 days, and these are this part. So this part is going here. You see the difference. The difference is that not this. The difference is this. So in this situation, we have a really bearish market that is moving really bearish before, but in this situation, we have a bullish market that is moving before in a chain. Okay, so this is a question of what? So multi-time frame analysis. So multi-time frame analysis plus, I would say, obvious reaccumulations and redistributions. Again, when you will have homework from after this session, you will analyze different pairs, and we will see how different patterns develop and how they present themselves. But this is an introduction. Now you need to ask yourself how, and this is all a part of context. So you see, this is, so in the context, multi-time frame analysis is basically what we discussed before, is structure plus zones plus confirmation, but now we add many new interesting things to it. And so how is the relation between the zones, between the structures and zones and their quality? So first of all, and their quality. Quality is the key word here. So you are not only looking at what the market did, but also how. And in this, let's come back to this situation, because this is a really nice representation of what I'm talking about. When you have your, maybe let me check 3-day. So again, this is a 2-day zone, so we know that this is a 2-day impulse, and then we see these impulses on daily. Yes, they are structural, and they have some zones. But if I ask you about the quality of this impulse and the quality of this impulse, well, because of this area, it's so weak. So the zones that created this impulse on daily, for me, they are low quality. First of all, because they are all mitigated, so even these wicks are mitigated, as you see. So when this impulse was created, there was no unmitigated part here, and only this makes it like lower quality. The move itself started really slow and then made some impulse, yes. But overall, it's a lower quality impulse compared to what we have in the market. And now I'm just relating this information to what I have from my higher time frames and my overall analysis of Euro USD, and I add that the market is starting the reaction from the zone. And now I ask myself, yes, I have 2 bearish breaks, but what are the chances that this zone will hold, especially for instance after this 4-hour break, given the fact that we are coming from a bullish market overall? And for me, the probabilities are lower. So maybe I will have 30% of this range actually holding. Plus, we have a much better zone higher like this. So now, even if we consider this a bearish shift in the market overall, so even if you say to me, okay, Dima, maybe I'm looking at this situation like this. This is an overall monthly impulse, which it is, and I'm expecting the bearishness in this market. And maybe this is a shift that I want to see. But even with that consideration, given the fact that we have a much better zone here and really weak zone here, we can expect the market at least to go and tap into this zone, even if you are bearish. Okay. So this is about the how. So compare the qualities of your main zones, so of your main bias, and your counter structure and counter zones. So the zones that are acting against your bias. Because if I'm bullish here, these zones are kind of acting against me, because they can give a reaction here and so on. Maybe the zone will even be a turning point in the market. But I need to compare their quality, their clarity with everything else I know. So this is the second question. And the third question you need to ask when you are discussing context is where you are in the market. So again, what, how, and where. And to answer this question, we can consider these scenarios in the market. The question where. Do you think, is there a difference? So I'm bullish from here, and now a different situation. I'm bullish from here. Is there a difference in these scenarios? And what is better for the entry? Let's say like this. So one or two, what is better from the standpoint of our strategy?
I will choose for the first part, because on a longer time frame it stay bullish. It doesn't break the how you call it, the
protected low, maybe, yeah.
Yes, protected low. And on the second part, where you are bullish, that can be the if it is going bearish, that can be the top right now.
This one, yeah.
Yeah, no, yeah, the second one. That if it turns now to bearish, that will be a lower high, and that can be the starting point of bearish.
Yeah, yeah. So we can tell this version, of course. And for me, the main part here, what I wanted to bring is that how much space we have to move in this direction and in this direction before we invalidate this range. So in both situations, we are definitely bullish, but in this situation, you are entering close to your protected low. So what it means is that if you are wrong with your analysis and this zone will fail, you will actually have maybe one or two losers before you understand that you need to reconsider your analysis. And if you will be correct, you have much more space to move in direction of your new target. And in this situation, we are also bullish. But yes, definitely, the market from here can have more ways of developing. It can do this and then reach the high, for example. Or even if it will go from here, maybe you will not have your RR enough to enter. So this is a consideration where we are in our main ranges. And if we are close to protected low, for me, it's better context because I have all the space and so on. Now, the second part of this question is asking yourself if we actually are breaking right now any kind of high on different time frames. Because yes, we broke the high and we are still bullish. But now, I mean, this is already a third scenario, yeah? Now we broke the high. Can we expect continuation to the bullish side straight from here? How do you think? Can we expect it? Can it go even higher?
It can, but most of the time there will be first because the market acts in waves. There will be a small bearish shift before the next upward.
Yeah, definitely. When we spot a place in the market where we are breaking any kind of high, then we need to consider again, different situations, and pullback is becoming more and more probable, pullback or just range, at least range price action, more and more when we have the higher we go after the break. So if you see that you are so much higher in this move, then maybe consider just keeping this range, this trade, and wait until the market will do what it needs, and maybe then continue new one, and then you enter here somewhere. But if your answer to the question, are we breaking any kind of high, is positive, then just in most cases it will mean, at least for me, that I'm skipping the trade. And now let's say this situation again, we have protected low, and now the market is starting to break, but it's just a week, so maybe it's 4 hours time frame, and it's 2 hours until the candle closes. So what we know right now is that we are going through the absorption, so what we can call an absorption or just a liquidity grab. So we didn't have a body close below this low, but we kind of here, and now we realize that the market can easily just snap back into the range. So this place is a good context to enter to the bullish side, specifically here.
No, I wait on smaller time frames that I can see a break of structure to the upside.
Yeah, definitely. At least see some confirmation. Or if you are bearish in this market, so let's say maybe your overall context is bearish in this market, and then you are flipping the situation, yeah, because if you are bearish, then
Yes.
maybe you need to enter somewhere here. But just if you want to be bullish, maybe wait actually for the price to come back into the main range.
Yes.
Okay, so these are the 3 questions that you can use as a start of developing your overall analysis with the context. And the last part of the context are actually different scenarios in the market. We already discussed them, some of them. And again, why you need to realize that the market is moving in a limited scenarios, because then you can say that my most probable scenario, for instance, in this situation, is bullish price action, because we are overall bullish, we analyzed what we can, but you need to understand what are the alternatives. The alternatives are actually this: the market just fails down. One more alternative can be the market is just ranging and then goes up. It's ranging and then goes down, so straight down. It's ranging, goes up, go down, and then up. Maybe goes up, but then down. So what scenario of this will we trade? How knowing how many situations can be in the market, what scenario we will trade?
Yeah, if there's too many scenarios, I will wait before I have a confirmation about which scenario is most probability.
Yeah, definitely. This is exactly what I was going to tell you, that we need to understand that there is a higher time frame, and then there is some lower time frames, and when you are going to your higher time frame, so we are bearish on this monthly. Let's say we have some unmitigated part. Maybe we have this really clear zone on monthly. So technically, what we need to do if we want a really high probability setup, we need to wait all the way until the market will tap into this area. But then, I mean, if you are some kind of a bank or something like that, you can wait for it. But if you're a retail trader, you can just consider it as a possible scenario. You can say, okay, yes, we are bearish, but maybe we are moving to mitigate some deeper zones. Then you go to weekly, you are bullish as well, daily bullish as well. And you say, okay, out of all the possible scenarios, I'm more leaning to the bullish side. And now, out of many bullish scenarios, because we can do it like this, we can do like this, we can even grab liquidity and then go bullish, I will use my lower time frames as my supportive bias. So supportive bias is a new, again, like you can consider it a new concept, but it's all the part of the same thing. And the main point here is that we don't need to be too much attached to the higher time frames. Yes, we need to use them for framing, but then we need to go a bit lower and find how the lower time frames are developing. And for example, if we went to this time in the market, or maybe even to this, maybe even this one will be a better example. Again, what you are seeing here is a bearish market, but you expect bullishness. And now you need to ask yourself, okay, so I'm analyzing context in this specific moment of time. I'm not too much attached but to my bias, but overall I want to be bullish. Is this confirming my idea? Basically, no. This is telling against your idea, because this market is bullish. And this market is bearish. And now you need to make a decision. First, you are waiting for your bullish confirmations. You already know how they look. And just wait for the market to start confirming your bias. Or you can analyze more and maybe find some like bearishness here, which can be okay, and just trade this bearish context for some time. But of course, in the most situation, it will lead to not optimal results, because you analyze, you know that until this point, this market for you, this market for me will be more bullish. And what I want now to wait for, so for me the decision is simple. I will just wait until the market will do this, and then I will become bearish and trade bearishness, or I will actually wait for my bullish signs. Okay. So again, there are different scenarios in the market, but we don't need to know everything. We just need some idea, first of all, of where the market can move, what it can do. We need to combine different time frames, and then we need to find supportive biases for these ideas, so for these scenarios. So this was the context for the analysis. So where, how, what, and scenarios, realization of different scenarios, and how it can go. And again, this, what we discussed, reaccumulation, is just one of scenarios. Again, what is the scenario of the change of a trend? So usually a trend will not change like this, or just I mean, it can look like it went in a V shape, but actually it didn't. If we see it more closely, we will see that there was a really long bearish price action, but sometimes it had bullish shifts in it. So yes, it were redistributions, but the market moved so long that it actually created bullishness in some moments, then created bullishness again, and now it went to some point and started this range at the bottom of the trend, followed by the bullish moves. And this is a common pattern of accumulation. Yeah, when you have a low, which is goes liquidated, a low liquidated, then some range price action, and then start of a new trend. So again, you know, for instance, from this analysis, that the trends will not change usually like this. We will have more liquidations, more accumulations, and so on. By the way, I forgot to tell you about the extensions. We kind of used it in your backtesting when you backtested during the homework. But usually when you see consecutive shifts of structure, and when the count goes to 5 and above, you now need to understand that the chances of reaccumulation is much higher in this place compared, for instance, to this place. And if the market will not perform this and go even higher structurally, so again, these are structural shifts, maybe we have some inside structure here, but overall, and if you have 10 and more, so if you have like something like this, now you really need to consider if you want to trade this zone, because you see back in time and you say, okay, yes, this is a really bullish market, but we had 10 consecutive shifts in a row. We are now more likely to expect reaccumulation. And in this specific situation, if you are here, then maybe go to lower time frames and trade until at least this point, because this is how usually the market moves. Again, this is a good example that the market started 1, 2, 3, 4, 5, maybe 6 here, and then it basically failed. But it didn't become bearish right now because we are in reaccumulation. We need to suppose that this is reaccumulation. But add this overextension understanding to your arsenal, because for us, overextension is not just a big move. Yes, kind of, but first of all, this is about structural overextensions on different time frames. And now about execution. So execution part is a bit simpler. So what you need to ask yourself is, if you have a zone, let's say here, again, I will just use this situation. So this is your daily time frame or your 2 days as your structural time frame. Now you want to confirm on 1 hour. On maybe let's go to 1 hour. So at this point you have your structural shifts, and now you need to ask yourself this: are we still in the zone or moving away from it? So am I finding my confirmation basically directly from the zone and with the first shifts of structure from a bearish trend on my confirmation time frame, or I already have some established trend now on a lower time frame, and maybe it even performed this first reaccumulation. So based on my experience, this place actually, for a better illustration like this, maybe this break, and now we have this zone. So this structural break, and this bigger zone. So in my experience, this place is better compared to this one for entry. Even that formally we are having the same structure. So what we have here is a bullish shift, and here we have a bullish shift. But the difference is that this is happening inside the point of interest, inside the zone. And we know that inside the zones, even if they hold, the market will do accumulation. The market will do some stoppage, and during this stoppage, it will liquidate lows before moving higher, and it will do it many times. So every time you are entering more straight from the zone, you need to consider it. You need to take it into consideration, not only from the formal reasons, but also from your expectation, because you need to build the mindset of you need to have a reality check. Yeah, you need to understand that if you want to have an early entry, then be prepared to liquidate, to be liquidated. Yeah. But then when you notice that the market already reacted from the zone, and not even that created this reaccumulation, because why? Because you have 1, 2, 3, 4, 5, 6. Now you have reaccumulation. Now you see that the market liquidated everything here, started a trend, liquidated weak side here after the first push, and now this place is even much more likely to enter for a good trade. Okay, so this is a question: are you moving straight from the zone, so inside from the zone, or moving away already? Also, of course, you need to have specific times of the sessions, like we discussed before. And one more question for executional context is when will the big news happen? Yeah, so we don't know, we don't need to know anything about the news. I mean, you can, but it's not necessary. So when I have my red news, so for instance, this is my entry point somewhere planned, but I have red news here. What I know from this is very easy information. I know that based on my stop loss protection, and in this case, for instance, if I entered, maybe I will protect myself here. I will know that I will be almost surely liquidated, because even if the news they don't usually change the structure at all. So the news, they actually confirm the structure more than not. So I expect bullishness from any red news in this bullish structure, because for me the price again, for me in my realization, the news, they don't influence the market in this moment. They influence the market in this moment, preparing itself for the bullish push. And I will be even more happy to see bearishness on the news release, because I understand that this is just a liquidation and my structure is bullish. But most importantly, I understand that I basically have no other option for me is but just to wait. Because I will be liquidated. But if the news, if I already entered and the price went here and now the news are dropping, I will hold my trade in break even, because I will just expect I will expect some bearishness, maybe volatility, but I'm protected, I'm high enough, and I can continue. So I'm just using the news as indicators to whether it's worth taking an entry right now or not. So as easy as that. Now the next question is, was there too much movement during the day already? So this question will tell you, again, you can use this indicator that shows you the average how much the markets move on average, but you can just see it visually. So let's imagine that the market, so let's imagine that this was the price action on one day. So what this day created, maybe not on 4 hours, maybe on 30 minutes, it created a break to the upside, maybe during London time, then or maybe like early London, then before New York created this, and maybe on the start of London created this, and then moved here. So sometimes if I will see the market like this, so the market that already created a lot of movement, a lot of breaks, and just a lot of movement, I will consider maybe again skipping the entry, or just having lower probability that I will have one more significant move during the same day. So what I usually want from my trading days is maybe a range that was created during the previous day, and now my perfect day will be this. So imagine that this is a 45-minute time frame or something like that. We have a range from the previous day, and now my day during London is just making a pullback into my zone, into my point of interest. So this day, so this is my day, it didn't create anything significant. It went in one range, and now it's in the zone during New York. And now during New York, it shifts to the bullish side. It has all this space. My bias overall is bullish, for instance. And for me, that's a perfect situation. So we didn't create anything significant yet, and we have all the New York to move to new highs. But if instead of just a usual pullback during London, we could see a new break and then a re-break to the downside. Maybe some news are dropping and it creates one more break to the bull side. And now coming back, now I see that we created everything here before. For me, it's like it's a bit too much. So this part is maybe the most discretionary from what I told you before. And then, of course, you need to ask yourself, is it clear for you personally based on your experience? And that's it. So This was a part about context, and we will finish on technical side for today.
Yes.
You will meet me talking about this in analysis when I will send it to you. My weekly recaps, and overall when we will analyze it. So I'm much more analyzing the market from all these points and some additional that we will discuss in the next session. But these are the main points. And you see, it's all based in the concepts that we learned before, but it allows you to consider much more options and to just explain the market much better. Okay.
Yes.
Now let's move to the mindset part. And let's start with this. So we will come back today a bit to your journal and discuss some weaknesses and strong parts that we already kind of touched on the first session, but never went into it deep enough. Let me quickly check. Yeah, actually, let's start with the ability to follow the set of rules. So while I was preparing for this session, I looked quickly through our previous session, and I didn't find this question that I asked you, but maybe you remember. So how many trades in a row were you able to follow any set of rules you had? So overall, do you remember if we discussed something like this?
No, I
No?
don't
Okay.
remember.
Okay, then
But to answer your question, I think no more than 5 trades.
5 trades or 5 days?
5 trades
Okay.
in the past.
Okay, Stefan, let's do 5-minute break, okay?
Yes, yes.
I need to take my dog.
No,
Okay.
no problem. I
So
wait.
see you
I
in
wait.
5 minutes, okay?
Okay.
Hey Stefan, I came back, and you?
I am here.
Okay. I'm ready to continue. Okay.
Yes.
So, 5 trades, but 5 trades they can be stretched into several days. So, how many days? Was it 1 day only? So, 1 day only.
It's, yeah, I must explain it better. I have tried several strategies. So on sometimes I was scalping, and other days I was swing trading, for example.
Mm-hmm.
So it depends on the style that I use on that time. But
Okay.
m- uh,
Okay.
after I have a big loss, then I was frustrating, and then I let go of the system.
Okay. So, let's say, for simplicity, that your different systems that you used, or maybe you're still using.
No,
So
I
yeah.
don't use it
Okay.
right now. So
Yeah. So let's say that these systems, different systems, are actually a part of one system, of one big set of rules. And these systems are just entry confirmation. So overall, let's pretend that you have one big system, and if you think about how many days you followed the rules of every system you have. So will it be 2 days, 3 days, 5 days?
I think 1 to 2 weeks.
Whoa, so there was a time where let's say 1 to 2 weeks, let's say it's 10 days. Yeah. So there was a time
Yeah.
when you traded for 10 days, actually following the rules you had at the moment for any kind of strategy you used. So
Yes.
yeah, okay. So basically that's a good result already. So 10 days is
Okay.
is a good, because usually when I ask people this question, they realize that they didn't follow like for 3 or 5 days. But 10 days is good for the start, but bad for a long-term consistency, of course.
Yes.
And of course, first of all, we need to realize that this is a big problem, and you will need to specifically work on the skill. So this rule following is a skill in itself. Yeah, because you have some
Yes.
rules. Now you need to follow them, and you need to understand one more thing, that these maybe big losers, I don't know why they happened, if because of the stretch or not, but if you don't have a rule following skill, you can have the best strategy in the world, like number one in the world, but if you can follow it for month, for 2 months, for 3 months, you can do anything with trading. Yeah. So this skill
Yes.
is a foundation. Let's just make a notice that we will eventually start this small rule following challenge, not but we will need to do it on demo.
Yes.
And this challenge is a really easy one. So you just write down the circles, something like this. And so for you, you told me that you have already followed for 10 days. So for you, the next milestone will be 15 days. Okay. And then during 15 days, no matter what, okay, you will need to follow the rules that you set up for yourself during this first day. Yes,
Okay.
they can be maybe not perfect. Maybe then on this day you will refine it, but overall, of course, it's hard to do on 100%, but maybe for 80%. So this is what you need to do. This is what you need to know, that you will do it as a part of developing your skill of rule following, because having rules is one thing, and then having the possibility to follow them is a really different thing.
Yes.
Okay. Now let's quickly discuss what you wrote me before. Again, I watched our first recording. We discussed it just a bit, and now we will discuss it a bit deeper. So on Fiverr, you wrote me about overtrading and impulsive trades,
Yes.
and not having one system. And then later, when we discussed, you wrote, oh sorry, in your trading plan, you said your biggest weakness is switching styles, no patience,
Yes.
emotionally vote, and too low self-confidence. So first of all, overtrading and impulsive trades, the easiest solution is actually having one system. So
Yes.
which are we doing right now? Let me show you my screen now, and you need to see our plan for one-on-one. Do you see this document?
Yes. Yes.
Yeah, okay. So you see, you have this overtrading and impulsive trades, but the solution, and then you say, and you don't have one system, but actually,
Yes.
when you will follow one system, and when you will have one system, backtested, by the way, backtested, and you will bring confidence from the backtesting, overtrading and impulsive trades, they will become much less. So you don't expect this as a solution, like a full solution, because yes, sometimes you will find yourself overtrading or maybe making impulsive trades, but it will be much better with a system. Now
Yes.
about these strengths, motivation, discipline, and enthusiasm. Definitely you have them, and you show them about how you are approaching the homework, how you are approaching, like you are doing it quickly, you are really trying to, so you are actually implementing the feedback. So again, let's just take a moment and appreciate this, because this is
Thank
real.
you.
Yeah, this is real, and you need to continue to use it. Now you have these strengths, a lot of knowledge, but with a lot of knowledge, you also are telling me that your self-confidence in the trading is kind of low. Do you
Yes.
think maybe it's a paradox? Yeah, so you have a lot of knowledge,
Yes. Yes.
but then low confidence. Why do you think it's happening?
Because I studied what I said earlier. I read 100 books about, for example, 20 systems, and I take one from some system, the other system, and I pull all together to form my own system. And I don't. Then something is. Most of the time it's going not what I figured or I had visualized before in my mind. And if I continued in that circle with bad trades, my self-confidence is will decrease every time I put a trade, because I eventually got to a loser.
Okay, and how do you think it's possible? Maybe we already touched on this matter, but how it's possible to actually have? Where will you take this confidence? Where will you take this?
I think you give me a great foundation to follow just one system right now.
Mm-hmm.
And I'm working at the moment at my self-confidence, not only in trading, but also
Overall.
in overall, because I think if everything has to be in balance, is my other part of my life is I have also need self-confidence. If I have self-confidence, I can bring that to my trading sessions.
Yeah. By the way, let me take a note. Let's do a quick check. So
Yes.
before, do you notice any difference in the confidence and any difference in confidence about our strategy before you started this backtesting and after you actually saw some results? Yes, it was simplified, but did you notice any difference in confidence?
Yes, it gives me, how do you say it? I got a more calming feeling inside of my body and in my head.
Okay,
That
and
tells me
why?
that
Why do you think it happened?
because it is for me a lot clearer right now where I am working at and what the system is and where are my mental part which I'm how to say it, I'm developed over time. And for me, the one the first thing I notice when I'm more self-confident is that I'm relaxed inside in my body. That
Okay.
calm feeling. That means that I'm more self-confident.
Okay, that's really nice. But if I will ask you, how confident, so what are we doing now is making this monitor of confidence like
Yes.
quick one. If I will ask you, if you will trade this strategy we are learning, so only this strategy on this level of knowledge you have now, on this level of
Yes.
experience, are you confident that you will not go into like a drawdown of 15% drawdown during next month, during live trading? So how confident about this statement are you?
I think between 60 and 70%.
Okay, 60, 70. And how confident are you about that you are able to keep overall break-even level for however you want? So maybe go to a bit of drawdown, then to profit, but not making like enough profit, just a drawdown level. If your risk management will be okay.
I think the same level.
Okay, the same level. So nice.
Yes.
So we will do it a bit later after more backtesting. But let's notice really interesting things that you told me. You told me that after you worked a bit, just a bit, this is a tiny bit of backtesting.
Yes.
You said, okay, I saw this pattern. I saw how the market can react from the zones that are
Yes.
created before. I worked on my rules a bit. And now imagine that you have 100 or 200 trades that actually shows you a profitable system that yes, you will have a streaks of losers, you will have some break-evens, but overall it will be profitable. So if you will have 200 trades that will show overall profitability, do you think you will become like even more confident in the fact that it's working, it's possible to do it like live and so on? Do you think it's
Yes.
yeah, okay.
Yes.
Yeah. And for me it's working like the same way, because I backtested before I started working on this strategy, but I backtested like a lot of different pairs and even a lot of different entry styles of the same strategy, and I didn't pay attention to this fact that it's really hard to gain confidence from the live trading, like from the first place. So you need to build this backtesting. And so this is the first thing. And the second thing, you see, you said you are saying me that you have some kind of confidence. So you are already 60 or 70% confident that you will not go into like catastrophic drawdown if your risk management will be good and if you will apply properly what you already know. And you already said that you think that if you will backtest more, you will have even more levels of confidence. So what my main point is that you see, you already have this confidence. Yes, it's a bit lower than that you want, but my main point is that instead of saying like I have like too low confidence or something like that, just you need to start admitting that I have confidence in this. So I have confidence in my ability to keep drawdown at relatively low levels, and then you just need to develop this confidence to higher levels. The same thing as people say, I have no discipline, but it's not true. We all have a discipline to some extent. The question is, if you have so for instance, some people have the discipline to keep risk management at 5% level every trade or something like that, but they want to keep it 0.5. So you see, they don't have the discipline for 0.5, but they have the discipline for 5%. And instead of so this is a bit of reframing. You see, you need to start to see that you already have it in yourself. Already, you have some level of profitability. You have some level of professionalism, and now what you are doing is moving in different levels of your expertise. So you are maybe on level 3, and now you want to get to level 10. But the nature of the feeling, so you will feel the same way, but about different things. You see, you have this feeling in yourself, but now you're feeling it about the minus 15 approximately. So you know that if someone will give you the account, you will be able to keep it at this level and not more during next several months. And you can feel calm and relaxed. But then later you will feel exactly the same about like making profit maybe 2% a month. So the feeling will be exactly the same. This is my point here. And now it's interesting what you say, that you are working about confidence in life. Do you think I also I was thinking about this question a lot in my time. Do you think it can work in a different direction? So confidence in trading, can it help in your life?
Yes. I need to I can find a word to tell you something extra, because in the other part of my life, I always have been a very confident person. So this is the only part in my life where I'm not at the same confidence level as the rest of my life. You can put me for a group of 1,000 people, or of someone who stares for me, who wants to fight with me, and I will stay calm and will be relaxed. But that is what I want to bring also to the trading table.
Yeah, that's really interesting, and I think this is this is actually a good starting position, because for many people, from what I know, from what I understand, that for many people they have low confidence both in life and then in trading, and then they just need to either lift up one part to influence another part. But now you are saying you have really high level in one part, and then just need some skills and some practice and some time actually to survive in the market, to develop these skills, and that's will be all. So again, really valuable that you have this feeling and you understand how it feels. You definitely can use it. Just take your time.
Okay, thank you.
Okay, and now let's do something like this with your mentioning about overtrading. A part of your homework will be to do these monitors about your triggers. So I will tell you in short what it means is you have some kind of an issue that you can express. Let's say it's overtrading or impulsive trades. Tell me first signs that you can notice in yourself that you will do an impulsive trade. So what triggers this? It's not coming from just nowhere, correct? So what is the first sign that it will happen?
If in the past, and that's something that I worked on the last of couple of weeks. In the past, for example, I said to myself, I want to make this week 1,000 euro. And if I didn't, and when it's Thursday and I was, for example, on 300 euro, I forced myself into trades to make the other 100 euros. And I really get impatience with myself, and I am really frustrated because I want I want the trade to reach my goal. I have to say I started 2 weeks ago with meditation. Every 6 o'clock in the morning, and when I go to bed, every session is 30 minutes to really calm down my mind, so that I will bring that calmness also to the trading table, to not over trading and to make impulsive trades.
Okay, how do you think? So let's tell this. So this is good for this first trigger, and I'm just taking into consideration that this is the first thing that came to your mind. That then maybe it's one of the main things that will lead to overtrading.
Yes.
And by the way, that's really interesting. So this kind of thinking is really can be really dangerous. Okay,
Yes,
I noticed in myself. So I will tell you from my experience a bit. When I was trying like to get funding, or again, or maybe I wanted. So I just have this thought. Yeah, one day I started to think, okay, maybe I need to make X amount of money this week or something like that, or maybe I want to reach my funding goals like next week or next 2 weeks. And what we are missing out is that we are at this very moment, we start to ignore what we already have. So what I noticed, remember you said me, so you have $300-400 profit, let's say. Yeah, let's say.
Yes.
But the moment you start to think this, that you need more, you are almost certainly, so for most people, they will forget completely about this, and they will not get any kind of mindset support from the fact that they already did something good. And because of that, because of the fact that they will not be grateful for what they already did, if they did good, it will put them in a much weaker position. So this is the first thing. And now, can you tell me this question about meditation and calmness? So let's suppose like you are starting your session like really calm, you are more or less neutral, everything is okay. But then the moment comes and you are starting to think, okay, but maybe I want more profits or something, and you are still calm. Okay, you are still calm, you don't want to do anything, and then you have a loser and you start this overtrading, and you start to feel like really bad. So in the moment when already this overtrading issue started, do you think your calmness from your morning and from meditation, from any kind of practice, when you are already doing what you know you should not be doing, do you think it will help you to stop?
Yes, because what I'm try to learn now in meditation is that I'm not focused in the past or in the future, but only in the present moment. So and I will develop my appreciating for something that I really have. So right now I'm more focused at the 300 or 400 euros than to fill up that gap to 2,000 euro.
Okay.
That so then I do I step away from my PC right now and do some bed work or go outside to clear my mind, and so to break that circle in my mind, to not fall back in my old pattern to overtrading.
Okay, and with that said, do you think it will be easier to do something right before you started overtrading? So while overtrading, you say it will help me, but
yes,
but if you will try to do something before actually, so maybe you already you know this thought, you know you're thinking this way, you know you start to feel a bit frustrated, you know this really bad feeling that it's not enough, you want more, but you actually didn't act for this overtrading? So before actual overtrading, will it be easier to stop?
It will be easier because I first of all I can recognize it now. In the past I didn't recognize it. Afterwards, and then it was too late.
Yeah. So let's move to the next point and just make a short conclusion. That usually it's when you have these triggers, and we will work on other triggers as well, but I just wanted to show you the process that you need to have an issue, then you need to ask yourself, what is my trigger? So what is triggering me into this behavior? Because we need to look at ourselves. So we need to compare sometimes ourselves to maybe a business and everything here. So overtrading is just a process that is happening with you. So it's not bad, it's not good, it's just something that you do, and then you need to ask, okay, this is overtrading, it just is, but what causes it? So we can't go too much into mindset or like, childhood traumas or something like that. We just need to work more practically. And more practically, this is what you called is really, really valuable as an understanding of yourself, of your trigger. So you now know that every time that you are starting to think that you want to make more, you become impatient with yourself. And by the way, did you notice at least, so from 10 times you've been overtrading, let's say, I don't know how many times it happened, but let's say 10, how many times you had good consequences afterwards?
What do you mean? I don't know what you really.
Yeah. So imagine you are started this overtrading impulsive trades. So from situation that you were overtrading, how many of these situations, how many days actually went up in profit, and you like started to feel good and everything was good?
Okay. Not one day.
Okay,
so every time I overtrade it is always a disaster.
Okay, is it valuable knowledge or no? Do it?
Yes.
How can you use it? How can you use it?
If I think about it at the moment when that feeling rise up, if I think back at, for example, at the past, if I'm then I can say to myself, it's always going to be a mess when you are overtrading.
Yes, definitely. You need to constantly keep in mind what happened with you before and what consequences it had and what results.
Yes, I want to say something extra. The last week I wrote a pre-market practice for me. And one of the subjects is all my biggest faults, what I make in the past, like overtrading, and what triggers me and what it's cost me. So before I start trading, I read it, so I know don't do this. So that's how I remind myself each training session right now.
Yes, definitely continue in the same way. So when you have this trigger, and again, this is just one of the triggers, we'll discuss more. But by the way, do you see this minus and plus?
Yes.
Okay. So when you have this trigger, don't only remind yourself about the negatives, but also tell yourself about the positives. So for instance, in my situation, when I have any kind of trigger that I know will lead to bad actions, I remind myself that out of all situations, it never ever led to good results. And even if I made profits, I didn't feel good about it because I know that I didn't follow my rules. And usually I lost then even more than I had before. So this is usual consequences. And then you need to ask yourself, but how? So our goal, the goal of overtrading is not overtrading. It's making this profit. So the goal is good, but but the way is bad of overtrading or
Yes.
impulsive. And then you need to say, how can I reach my goal? And usually it's about following your tested system, your rules. But so for many people, they just want faster, they want faster. They kind of know that their system works, but the thing is, for most systems, you need just some time. You need to give them time, and you need
Yes.
to think in weeks, in months. Yes, sometimes the move presents itself that can just give you like a lot of profit, but again, it all comes down to this long-term thinking. So
Yes.
when you have this trigger next time, what are your corrective actions? So we already discussed something. So meditation, yeah, maybe you can even have a session. So you start to realizing that you are not thinking in an effective way. So maybe it will lead to overtrading.Maybe you can go meditate. Then self-talk, self-talk.
Yes. Yes.
Self-talk. You can start. You are realizing that this is not just me thinking. This is actually a trigger that will go to overtrading, and then you start corrective action. Why you want to start corrective action? Because you understand that the moment you actually will start overtrading, it will be even harder to stop. So you take efforts to stop earlier. And
Yes.
how do you think, what else could be done? What other corrective actions could be for overtrading?
Step away from the computer at that moment.
Will it be easy for you to do if you are like?
Yes.
Yeah, it's
If I
easy.
said to myself, step away, I can step away immediately.
Okay, so if this is true, Stefan, then first of all, again, say to yourself that you are really. So this is a part of a great trader in you, okay? Because many people, they just can't stop. I was talking with another student, John, previous week, and he has a really like a superpower in my eyes. So he's trading for like 2 or 3 years or something like that, and he never blew an account even once. Can you imagine?
Yes.
So, and he never went into big drawdowns because he has this really nice risk management. But for him, it was so natural. He even didn't think that how cool is that and how strong this part of him is. And so for you, if you are able to step away, you need to treat it as a superpower, because many people, if they have this goal to make something a week or anything else, so for instance their analysis is breaking, so this is a weak part of mine. When my analysis is breaking, I can become a bit too much attached to the zones, to my analysis. So I want the market to work my way. And for me it can be hard to step away because I want to absorb the market. I want to see how this situation develops. But if you can do it, it's a solution to many problems. So
Yes, I learned it
yeah.
I learned to do it when your alarm clock is ringing in the morning.
Oh, nice.
Don't stay in bed the first thing when you hear it. Immediately get out.
Nice.
Otherwise your mind takes over. And
Yes,
I
yeah.
want to add something others. What you just mentioned about John.
Uh-huh.
In the 2 years I'm trading, I don't ever blew any account up. I am still break even at the moment that I start.
So you actually didn't
Because
destroy any account at the moment?
no. I don't. No. That's not a part of me.
Okay. Then you have two superpowers, okay?
Oh,
But
I'm not aware of that.
uh,
And
yeah, but you need to become aware of that, and let me explain why. Because in trading, like we are constantly thinking about like improving, about making new goals, about being better, but we can't forget what we already have. And you need to acknowledge, you need to really appreciate the strong parts of yourself. And if you don't forget about it, you really need to use it. And this you see, this thing that you didn't blow any account, it's not about only numbers. Yeah, it's about that, it's about your overall approach. And then you can, it's for many people, being break even is a huge achievement. It's really huge. But now you're already there, and now you just need to work on consistency and a bit of profitability.
Yes.
So great information, and thanks for sharing. Okay, so we have corrective actions like self-talk and step away. Already nice. So once you know, so for example, you think, okay, maybe I need to make more this week. Then your next step should be, okay, do I really need to make more this week? Or maybe I'm thinking this because now I want to have this trade that I think need to work, and maybe I'm closer to over trading right now in this very moment. And then you need to think, okay, do I really want to start this new trade or new couple of trades? Maybe I need to step away, and maybe I need to talk to myself more because I know, and then you remind yourself about the consequences and so on. So when you have this process, overtrading should be a bit easier. And in this way, you can think about many other things like confidence, discipline, anger, fear, and you can not only think about triggers and corrective actions, but also you can think about other words that you are telling. You can think about external situation that you have in your life. So you need to find more connections between what you are doing in trading and overall. Okay, by the way, let's quickly come back to confidence, and we will finish in 10 minutes. How confidence? Remember, I told you about this challenge for 15 days. So right now, how confident you are that if you will start this challenge, so if you will make an intention of following some kind of rules for 15 days, so
Yes.
you will be able to do it, yeah?
Yes, it's because it's a challenge. I will say to myself on forward, I visualize that I will pass at 15 days without any problems.
Okay. And about,
because you said it, and that made it stronger. If I said it to myself, it is a little bit not, less stronger.
Yeah. And by the way, now let's maybe do this. Yeah, so we are close to homework now. But one more thing about trade plan. So in your trade plan, you said that your like usual RR should be minimum 3 RR.
Yes.
And then you said that your risk per trade is like 200 euros.
Yes.
So these are the rules. Again, we discussed this a bit. How confident you are that, and you said also that you will not move stop loss,
Yes.
So is this a true?
In all the two years, I think it happens about 4 or 5 times that I move my stop loss.
Okay, so actually this is a true rule for me. So this is true.
Yes.
Did you ever risk more than 200 in one trade?
No.
Okay, nice. So this is true, but and do you have any rule for the day? So a maximum amount you can lose in a day?
When I have 3 trades, when I'm stopped out, I stop for the day.
So like 600.
Yes.
And you never violated it?
No, that that rules I never violated.
Okay,
Because
this is true.
my origin is I work for the biggest bank in the Netherlands.
Okay, nice.
You always follow the rules of the. I can't compromise the rules.
This is actually really great. Okay, this is really strong position. And what about your take profit? So you say that your usual take profit is 3 RR, let's say, a minimum.
At least, yes.
Yeah, at least. Did you find yourself closing earlier?
Sometimes when I'm not really in my in the trading zone.
Okay.
When I sometimes get.
Yeah, but to be honest, in your situation, I think that's also true, because it's not like a break of a rule. For me, it's more about that you don't have this rule with a good foundation, in my opinion. So
Yes.
what I know.
Yes.
You kind of don't know exactly how your management should be.
Yes.
Well, to be honest, I expected that you will say that you broke something significantly, and then I would say that, and then we will try to find your true rules. But actually, you're very good at following rules, and
yes, you can put me in the army, for example. I will follow the rules for the system.
Yeah, this is right. Then we will just skip this part. But again, this part was like we started in the first session, is really finding if your words and actions in the trading are the same. But as for now, everything is good, so let's keep it. And for the homework, I will send you. So first of all, I will send you a basic checklist that you can use in your own trading plan. Again, I encourage you to take this checklist and maybe work a bit on it from your personal perspective, maybe write in your own words or something like that. But basically, I will send you in short form everything we talked about, and that's all. Then your homework will be analyzing 3 pairs, like using context. So you will analyze a pair. Do you know how to record a video screen or a trading idea on TradingView with a video? No?
Oh, I can use OBS.
Oh yeah, nice. So you will record with OBS how you analyze a pair, and then send me, and then I will comment, and we will do 3 times like this. So analysis.
Okay.
Then you will do full back testing. I will send you a short video about what I mean by that. And 5 paper trades or demo trades. So paper and demo, it's the same thing for me. So you will need to open a demo account, or if you want, just paper trade on a chart in TradingView. So for me, it's the same, but better. Do you have a demo account you use? No?
Yes, I have a demo account and I have a TradingView, just both.
Okay, so it will be better if you just use it as a demo account. I will send you additional details as I did before. And once,
thank you.
So this is the main part, back testing 30 trades. This is the main part, and you will do it after analysis. Once you do this, we can move to the third session. So I had this true or fake rules task, but for you, I will delete it because it's not relevant. And basically that's it. Yeah, that's all for today. And
thank you very much.
Yeah, I hope it was useful.
Yes, I really appreciate your words and your time, Dima. You're super good.
Okay, thank you so
superhuman.
much. Thank you so much for this, Stefan. I really hope to see. Real results, and believe me, if you will continue, you will find your edge. So this is what we are working on now. Thank you by the way for your feedback. It's of course for me as your trading coach, it's really important to hear it. And we'll continue in the same manner, sending the recording soon, and have a great day. Okay.
It's the same for you. Okay.
Yeah. Bye.
Okay. Bye.